pitch sounded modern, an automated trading pool that generated strong daily returns, shown in dashboards and paid out to members who could also earn by referring others. The brand name was Mirror Trading International, widely discussed in South Africa and beyond. In this episode, we step back from personalities and focus on structure. We explain how promised returns were sold, how referral networks amplified deposits, what blockchain breadcrumbs can and cannot show the public, and the prevention checklist that applies to any high-yield club. We will use neutral language and focus on publicly reported patterns. Where facts are disputed or still before authorities, we will say so clearly. A recurring feature in high-yield clubs is the cadence of returns. Members see numbers that appear daily or weekly, often expressed as small, consistent percentages. Consistency is psychologically powerful. It feels like proof of a working system. In reality, market returns are lumpy. When a dashboard shows smooth gains day after day regardless of external conditions, treat that curve as a story, not as evidence. Stories can be generated. Cash generation is harder to fake for long. The second feature is the referral engine. Many members first hear about an opportunity from a friend or relative. Referral links, ranks, and bonuses create ladders that reward recruitment. This structure changes the flow of information. A sponsor wants to keep momentum. Doubt is framed as negativity. Screenshots of withdrawals are shared to calm questions. The network becomes a filter where good news travels faster than bad news. In this environment, risk management looks like disloyalty, even though caution is the behavior that protects families and friendships. The third feature is the money rail. Deposits arrive quickly via crypto or local bank transfers. Withdrawals may work early on, and that success is used in marketing. I was paid, therefore the system is sound. But early withdrawals do not guarantee long-term solvency. In club structures, withdrawals are often funded by new deposits. The moment inflows slow or authorities intervene, withdrawal friction rises. Members sometimes hear that systems are undergoing maintenance or that compliance checks require new documentation. Each delay may be explained. Repetition is the key signal. When exceptions become the norm, risk is high. Because many clubs operate with crypto rails, people ask whether the blockchain can prove what happened. Blockchains are public ledgers, but attribution is the challenge. If a named pool or wallet can be identified with confidence, the public can see inflows and outflows, timestamps, and sometimes mixers or exchanges involved. This can help build a picture of activity. However, without strong, public attribution, reading the chain becomes guesswork. Screenshots of anonymous addresses are not enough. For ordinary members, the safest rule is to base decisions on what you can verify directly in your own accounts and on disclosures from reputable authorities, not on forum posts about supposed wallets. Let us separate confirmed patterns from disputed matters at a high level. Confirmed patterns in many club schemes include referral rewards, dashboards with smooth return lines, and a shift over time from easy withdrawals to delayed or partial withdrawals, followed by investigations or legal action. Disputed matters often include precise balances, the existence and performance of proprietary trading systems, and the attribution of specific wallets or trades. As listeners, we avoid speculation. Our goal is to map the signals you can use in your own life. There is a simple, repeated tension in these stories, evidence that is easy to create versus evidence that is hard to fake. Easy evidence includes screenshots, testimonials, and staged live trades. Hard-to-fake evidence includes independent audits, custodial statements from regulated firms, and verified bank transfers into accounts in your own name. When a system offers plenty of the first category and little of the second, your caution should increase. Ask for the boring evidence. If the answer is that proof will arrive later, do not rush your money today. Practical steps for listeners begin with testable rules. Only deposit amounts you can afford to lose completely. Before adding more, test a withdrawal to your own bank account in your own name and document how long it takes. Do not reinvest everything. Keep screenshots and statements, but treat them as personal records, not as proof of solvency. Avoid borrowing to deposit or persuading family members to join based on your early experience. Remind yourself that good first outcomes in a club do not guarantee good outcomes later, because networks can change very quickly when sentiment turns. Language helps when you need to slow momentum in a group chat or at a braai. You can say, "I'm glad withdrawals worked for you. My rule is to keep any single opportunity below a small percentage of my liquid savings and to test withdrawals regularly." You can also say, "I don't invest in systems where the only exit is inside the same platform or where returns are updated daily with no external reference." These lines are calm and non-confrontational. They protect relationships while keeping your boundary clear. If you believe you are exposed and you want to reduce risk, plan a staged exit. Withdraw small amounts at regular intervals instead of assuming large withdrawals will work when you need them most. If withdrawals stop or become inconsistent, write down dates, times, amounts, and responses you receive. Keep communications factual and polite. If you believe you were misled, consider reporting to your bank, to crypto exchanges involved, and to relevant consumer or financial authorities in your jurisdiction. Be ready to provide documentation. If someone in your circle is still excited, share your records and your rules rather than arguing about personalities. For those who recruit others into any program, the ethical and legal risk deserves attention. If you tell people that a return is guaranteed, if you downplay risk, or if you suggest facts you cannot verify, you may expose yourself to claims later. A healthier stance is to share general financial education, not specific pitches. Encourage friends to diversify, to test exits, and to be wary of club structures where social pressure replaces documentation. Now, a short prevention checklist tailored to high-yield clubs. First, returns that accrue daily at consistent rates are a red flag. Second, dashboards that show internal balances but require windows or approvals for withdrawal are a red flag. Third, referrals that pay you more for recruiting than for any product sold to external customers are a red flag. Fourth, opaque trading strategies that cannot be independently audited are a red flag. Fifth, resistance to third-party custody, verified statements, or external exchanges is a red flag. Any two of these together should pause your deposit. It is natural to feel defensive if you joined something that later caused loss. People from every background have been caught by polished pitches and community momentum. Shame helps no one, procedure does. Freeze further deposits, document what happened, ask for formal statements or closure communications. Speak to your bank, your exchange, and authorities as appropriate. Support others who are processing their own decisions. Make new rules for yourself and teach them to your children. Slow down, diversify, and test your exits before you add more. We close with a calm reminder. Schemes thrive on speed and silence. Protection thrives on pauses and questions. If someone says you must decide today, decide to wait. If someone says you cannot withdraw because a special event is around the corner, withdraw something small to test the claim. If someone says you are negative for asking basic questions, step back and protect your future. Your goal is not to win an argument. Your goal is to keep your savings and your relationships intact. In our next episode, we look at AfriCrypt and the broader topic of due diligence for retail investors. We will break down custody and control, proof of reserves language, and the simple checks you can run before you send funds to any platform. Narration generated with AI, facts verified from public sources. No legal advice is given in this episode. The purpose is education and public safety. If you have a case tip or a documented pattern to share, use a safe channel and remove personal information that could identify non-public individuals.